Big investors, CEOs, and insiders are selling billions of dollars of stocks. We're going to explore how this is affecting retirement savings, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. The stock market and financial markets have been moving higher over the last year or so without much selling. Now here recently, we started to see some selling in the markets, and it's catching attention of many investors, especially those who are either in retirement or building their retirement savings. So we're going to explore what's going on in the markets, how this is going to affect our retirement savings. Let's take a look at some of the headlines. CEOs and insiders sell a record $69 billion of their stock, and the year isn't over yet. Let's look at some of the largest insiders selling stocks. We have Elon Musk selling $10 billion of his own Tesla. We have Jeff Bezos selling $9.9 billion of Amazon. The Walton family selling $6.1 billion and more here. Interesting enough, not pictured, is the CEO of Microsoft, and he sold 50% of his stock. Now this makes you wonder, scratch your head, what's going on here? Are these folks just selling because maybe taxes are going up next year, or is there something bigger going on? Let's take a look at another headline. Cyber Monday, online sales dropped 1.4% from last year, falling for the first time ever. Are these insiders that are selling maybe hinting that their earnings are going to be dropping next quarter? And we're certainly going to want to watch the Apple stock. Here's a headline. Apple stock slides amid fears of slowing iPhone demand. If iPhone sales are down, it's most likely going to hurt the Apple stock, which is one of the largest stocks held nationwide. If you have any reaction to this news or thoughts, leave your comments. Another area that might be on investors' minds is the possibility of interest rates going higher. We're looking at the 30-year fixed mortgage interest rates. If interest rates for mortgages creeps higher and reaches certain thresholds, this may have a dramatic effect on the real estate market, which is a big part of the United States economy. Let's take a look at how this is affecting retirement savings and investors. We're looking at the S&P 500 ETF SPY. You can see up at the top right where it says now, that's where we're at right now. Despite some of the selling that we have seen in the last couple of weeks, we don't have a sell signal in the S&P 500. We're looking at the S&P 500 on a daily chart. Where we would be concerned with the S&P 500 and the market in general if the S&P 500 started to drop below the 4,250 level. At that point, we could start to develop lower lows and lower highs. If that happens, that could be a negative sign and possibly a downtrend forming. Now, when looking at the index funds, that doesn't always tell the full story. If we go down here and look at the number of stocks in the S&P 500 above the 200-day moving average, we'll see that 60% of the stocks are above the 200-day moving average. That means 40% of the stocks in the S&P 500 are below the 200-day moving average. That means individual stocks are seeing some selling. For example, DocuSign was down 42% on Friday. Tesla's 20% off its highs, and you may know of other stocks that are down. Here's a daily chart of Bitcoin. Bitcoin is down over 17% this week alone, and it's off the highs about 30%. We're looking at the NASDAQ 100 QQQ on a daily chart. Even if we have a 10 or 20% drop in the NASDAQ 100, and I'm not saying we're going to have that size of a drop, but if it does happen, it's still not going to be a disaster in the markets. What it's going to lead to is buying opportunities. That's what we're going to be looking for, is buying opportunities. So if you've been in the market for a while, a pullback is a normal part of being invested. Now, if you just bought into the market, I don't see this as a point to panic sell at this point. If you're dollar cost averaging in the market right now, you're still in good shape. Again, when we get these dips, those are going to be times when you end up buying more shares. Now, if you just started retirement in the last year or so, and we do get into a bear market in the stock market, for those that have just retired, there's something to be aware of. It's called the sequence of returns. So if you're withdrawing money as the stock market is going lower, that has dramatic effects on your saving. It's going to take you a lot longer to build that savings back up when the market does go up. So that's one thing I keep in the back of my mind if I'm a new person that's just started retirement. So I want to thank you for watching here today. Stay tuned for further updates on the markets.